talking about you.
We're making some scuttles.
Yeah. Well, you know what? We better get Credelli in here now.
Oh boy,
he's in Scotland eating a lot of fish right now and drinking a lot of
Is
brown.
he?
Yeah.
Is he in Scotland?
He went to England last week. He was in London last week for the I think the FIA thing, and then he and his wife went to Scotland for a few days.
It's when you have the same hairstyle as Trump, you get invited to those things.
Of course, yeah.
Hey, Ira, I got to ask you something.
Uh-oh.
When you're doing your interviews on the Financial Repression Authority, are you on your cell phone or do you have anything on in the background?
Well, that wasn't me. That was not my background noise. But no, I try to sit quietly, and I've been using my headphones so I could blot out, because sometimes my dogs start barking. So I've been cognizant of that. I know it was really bad, but what can I do? He's in Singapore now. So Richard Benu. Oh no, actually he's still in Canada for a short while more, and then he's heading out to Singapore.
But Daniel Lacaille is good, isn't he?
Oh, I went. Angela sent me, and I appreciate that. So I had never read his stuff, but in having that discussion, it was a good introduction. So yeah, he was good. He's good. Very, very deep, and the fact that he actually is a financial, does his stuff himself, that gives him credibility. It's one of the things I like about Peter Bookvar, is that Peter actually manages the money.
All right, so we've been looking at. I started playing around here. I just had my my stuff turned on live, Ira.
Yeah.
My metals, because I've had them delayed. Because I love the CME fees.
Oh yeah, trust me.
All right, so here I've been looking at. I got to change these spread bars. But you've got an ORH quarter working in the Aussie. You just had the Swissy going up. I think it's just through its 200-day right now. So I've been looking at the gold Aussie on the quarterly. It's not quite there yet. The yuan doesn't have the same pattern, but it's still pretty powerful. And that hasn't even started up yet.
No, you know what? They're really now the gold euro, when I looked at today, it's heading out, and the gold Swiss still. I'm glad the Swiss rallied, because whatever gold I can play with here, I talked about last week that I thought the dollar was going to come off here a little bit. I don't know why. The dollar it's been playing around here too long, and I think a lot of some of the better analysts I read over the weekend, that guy Eric Peters, who does some really good work, he had a funny interview with the guy, and I think that's right. What you have to watch here, and it's way too early. But in a typical place, if the economy was starting to go into a slowdown, the dollar would actually be rallying. But the guy made the point, and it was worth thinking about, that because the euro and the yen and the Swiss have been used as carry currencies rather than the dollar, because the dollar interest rates have been higher, that if people start unwinding positions, the dollar may actually be sold off here. It's too early. It's interesting that that's what was discussed by a few people, and it's worth watching. But I'm really staying close. There are some things here, Judd, as I pointed out this morning, that one of my favorite in fact, it's one of the biggest plays is that the Russian ETF has been going up, and actually really didn't even go down. It closed up higher for the month of May, and that makes no sense because the oil was down $10. So, it always used to be that whatever was good for, if oil was up, Russia was up. So that's breaking down. And and I've been of the mindset for quite a while that the United States is going to act to remove some of the sanctions on Russia. I think Putin has a very strong hand to play. I think Pompeo went to Russia for a reason, to get Russia to sign on. And supposedly over the weekend, Putin announced or quietly started to remove some of the Russian advisors that were down in Venezuela. So a lot of things here. Then you got Bullard, who the guy talks way too much, and talking today about, of course, cutting rates, but in an effort to get inflation, which is just a ridiculous discussion. But and this has been my point, that if I ran the Fed and I was concerned about whatever they're concerned about, we knew that they were concerned about something during the pivot back in January. But if the concerns have grown, you better not be doing quarter point cuts. As I say, there should be the Jerome Carriel cut 75 basis points, take it down, take it back to 150 on the Fed funds, lower on the interest on excess reserves, and say to the market, okay, we're a little nervous here, and here's why, and we're going to just hold rates here for the next 6 months, a year. That would be forward guidance, and we'll see the way things played out. But we're a little nervous here that things are slowing, and we want to get ahead of it, but we're not going to zero. So get that out of your mindset, and here's where we're at. But they just don't, unfortunately, they don't have, we're speaking Italian. They don't have the Guillons to go that route. So as long as we're eating escarole and, pasta fagool, we may as well talk about Guillons. Sorry, Pax.
Yeah, because that was what a couple of questions that came in here was about rate cuts and equity going lower.
Well, we went from no rate cuts to and it's actually being discussed, and it's being discussed in more than just funky. I know Peter Schiff was out. Peter is eventually going to be right, but if anybody's got any money left, including himself, because it's been a long haul. He was out making noise this morning, which was interesting. But we'll see. And the gold has gone so fast here, out of nowhere. Somebody's getting reamed, but I thought that the gold would rally because for Thursday and Friday morning, both times when the gold would usually get sold off in that little window that we've discussed, didn't happen.
Well, I totally missed the signal in the gold on Thursday when it put an ORH day in.
Yeah, I know. Believe me, I was selling into it because I'm so used to getting my head handed to me off of that. And then I bought some back that night. But when Trump came up with those tariffs, I was on my way to 26, not in California, easy boys, 26 in Hoyne. I was going to a dinner. Yeah.
26 in Hoyne might be worse than 26 in California.
Oh, no. It was actually, it's not bad. There's a place called the Garrity, which is this big event place. Yeah. It's actually really nice. I parked right on Blue Island. It was not bad.
Oh, you got to be out of here. I wouldn't get on there unless I had a flak jacket.
No. I walked 2.5 blocks to the venue. It was fun. You can't believe what's going on over there. So it's actually had a very, very, very nice time. There is a lot. I know Zero Hedge had a piece about the gold, silver, because there are a lot of people now who have to look at the gold, silver. And I know, Judd, we've talked about this because we're up at 90 or we're up at 90 overnight. And I'm from the old school, if the metals are really going to get good. And it's interesting that platinum had a really big rally today after looking like so dismal last week.
And that's putting in an outside reversal higher day in too.
Yeah. The silver is just lagging here. It's just lagging. And I know because the algos have it tied to the copper. And yet, I run that silver copper ratio. It's right next to my gold silver ratio. And that one actually turned last week too, even with, the silver being a little soft. But that actually is starting to look interesting. It's like, where's it at? 50, 55 something today? 55.80, which is, it's been a really quick move here. I mean, gold has been certainly more dramatic, but that's had a lot of movement. It's at 55.80, 55,
Which
5
one you
point.
looking at? Sorry.
The gold. I watch silver copper just because you have to, because of somebody else is doing the correlation. And when the stock market goes down, the silver gets soft relative to the gold. And it's a question of how does it hold up to the copper, because they're both viewed in that regard as an industrial metal. They don't know how to treat silver. Is silver an industrial metal or is it a precious metal? And right now, the algos have it probably more heavily weighted as an industrial metal. You can see it, which is why the gold-silver ratio, I don't know if you've looked at this chart in a while.
Yeah, it hasn't got going at all.
We're at, hold on, we're at, what, close to, 20-year highs, 22-year highs, 23-year highs. I mean, this is significant, and it just cannot get going, 25-year highs. So I find that fascinating, but there are people who are starting to look at it. And don't forget, nobody's been long the metals a lot. Again, these hedge funds, I'd like to see the results because they were short the grains, the big funds, according to the Commitment of Traders reports, and they've been short the metals. While the banks have been buying, they've been selling. So this to me gets really interesting. We are really, because again, what makes it interesting? We're starting to see a breakdown in some of these correlations that have been long time held up by the algorithms. They've really done their work and created these correlations. I think they're correlations that fit by price, but when you look at the underlying fundamentals, I've been very skeptical about them, which is why I've been looking for a what would Soros call it, reflexivity, that type of, and we haven't seen it. So I'd love to see it develop 1, 2 days, 3 days, 2 weeks. It doesn't make it yet, but it is worth watching. And we've seen this quickly.
I mean, I can't believe that this gold silver is trying to go back to where it was in 1988.
Yeah. And then the curves have steepened, fairly dramatically too. The 530 was out to almost 69. I don't know where it is right now. And we had when last we talked, I remember, Pax, I think we were looking at the 210 at 14 and a half.
Yeah.
Well, this morning we were at 25, 26 at one time.
It's just been crazy. I'm surprised it's not having I'm surprised a little bit, Ira, that it's not having a more dramatic effect on equities. You know what?
And on the bank stocks.
That's exactly that's precisely it. That's exactly right. Yeah. Yes. The bank stocks. Because that's it.
If I had to listen to a CME commentator analyst talk about how this has driven the banks flattening curves. Well, you should have had a robust move in the bank stocks today, because you're back above the 200-day moving average on the 210, and the 530 really held out pretty well, for quite a while. Now the issue is there's been some flattening, of course, on the shorter end, Fed funds issues and other things. So you really have a lot of things in play here. And the Fed is going to have to own up to some of this. They own this, and they may not want to admit it. Of course, they'll never want to admit it, but they have to own some of this stuff, because they've created this very fragile financial edifice, and it's hitting them right between the eyes right now.
Well, you look at this 2 chart I sent you this morning on the weekly that it's, filled that gap from 2017, December 2017.
Yes.
It looks like it wants to go to well over its 200-week moving average.
Well, my point is, and I heard you guys talking about it when I first clicked on, the 2s are the place. Because, again, up until today, it was costing me 15 basis points to be along the 2s rather than the 10s. And as I would say to people, why would I take on 8 years of duration risk for 15 basis points? And you know what? If the Fed's not asking themselves that question, they have a big problem, because they could resolve this flattening curve in a minute, but then they would have to admit that they had something to do with it by their policy. And of course, that's been a problem. It's everybody but them.
Yeah, I mean, it's and the 5s look the same way.
Yeah, the 5s have been good because it's been the 530 play, which has really generated some really nice movement. That 530, and that's what I call the speculators play, because the Fed is not buying really 30s. Yes, they've been involved in the mortgage-backed securities, but now they're certainly, by what they've said, and the minutes reflected it, is that they're going to try to get rid of all their non-treasury held, all the non-treasuries on the balance sheet. It's just a matter of how fast they can do it and move totally into the treasuries, which is why they were going to start buying more on the short end, because that's where the government's issuing its debt anyway. Between, they're basically staying in 1-year bills and maybe out to 2-year notes, and that's it. But they're talking about doing their borrowing. The Treasury's talking about doing their borrowing in that window. So this could really, if the Fed were to step into that void, could really boost the short end, not rates, but boost actually lower short end rates while putting more pressure on the long end. And they could actually move to steepen the curve, but they want to be cryptic and not really tell you. They want to tell you that they're being transparent, but they're so afraid of what the market would do that they're moving slowly and cautiously. But I offer this, and I know we talked about it last week. Simon Potter going is not to be minimized, and this may well have something to do with it. The fact that they won't move that direction or openly state it. So we don't know. Everybody is it's all conjecture.
Hey, Ira, it's Matt C. How are you?
Good, man. How you doing?
Good, thank you. I was wondering, have you given any thought to the wage index pressures? I'm checking here, and this is not my work, so I'm no expert, but the current wage index has soared. Expected wage index has also soared, to an all-time high. Is there something that keeps them on pause? Maybe. I mean, that's their boogeyman, right? Ultimately.
Yeah, I think that's bullshit. And I'll tell you why. Because again, it's not bleeding. Wage pressures do not necessarily translate into inflation, and this is the crux of the whole discussion. The Fed has maintained that, and if we go back and look, okay, here's how wrong they've been. In that, if we go back to when the economy was starting to gain some footing after the great financial crisis, do you remember what their level of when they were going to start moving to, when they were going to start to act to remove all that stimulus? Do you remember what the unemployment level was, the first number?
It had to be closer to 5, wasn't it? Or 6?
7.
7?
And then they lowered it to 6.5. They kept calling it moving the goalpost. And then they moved it to 5.5. And then unemployment went to 4.8, and they moved it to 4.5. And now we don't even hear it, because that was their, what they referred to as the NAIRU rate, the non-accelerating inflation rate of unemployment. that, oh, this is, or what Bernanke would famously refer to as closing the output gap. So you had negative gap until you got down to those levels. Well, they proved wrong on all accounts, but they started at 7%. That was their first bogey. And now I applaud them because at least they admitted that, without admitting that they were wrong, they admitted that they were wrong, but they don't even know where this number lurks. And I'll go back to what my basis argument is that if you can't raise prices, meaning U.S. corporations, to the domestic economy, that means wage gains have to come out of profits, which have been exorbitant by historical measures anyway. We were at record high profits as a percentage of GDP probably up until late last year. So there is room for wages to go up without prices going up. And the Fed's caught here with that, because if corporations want to sustain their workforce and not invest in capital investment, then pay more, but it's coming out of profits. And there's room for it to come out of profits. There's room for it to come out of profits, which is why, I never accepted the PE levels that a lot of the, great Wall Street bulls were throwing about. I said, wait a minute. If the economy is that hot, wages are starting to pick up, and yet your prices are, as the economists would say, are sticky down, there's only one place for those wage gains to come from, and that's profits. So, if that's the case, then stocks are more than fairly priced. So, that's where we reside. There's no easy answer. Nobody's got the answer. It's all, hypothetical anyway. It's all, theory. So we're trying to see the way it plays out. But I would have to say that the Fed has been very, very off base on this the whole time. And their concern about wage gains, going back to you, Matt, is I know that, I know Bookvar's work on it, and I've seen other people who I respect. Yeah, and there are some wage gains, but they're not bleeding through into the price structure. And now you have more pressure because, inventory. If inventories are building, then like automobile inventories. I didn't see the auto numbers today. I haven't paid attention to them because I've been looking at other things. So what were auto sales for May? Anybody see them? Wait, hold on. I have a place to go to find them. Let's see.
Here, Eric here put in here. James Steins is expecting silver at 2,000. So we need some of what he's got, and then you mean
here, gold at 2,000?
Yeah, gold. Silver, no.
Well, that's okay with me. I own it from the matrix level last week on based off the open at 1287. So I'm gonna. That's my target. That's not my new target.
Yeah.
Yeah. Well, you know what? 1908, which was, I think that was the high. If everything around the world, and again, it's not inflation. My argument has been consistently that people. You don't buy gold in times of war. You can do it as a trade, absolutely. But you better not sit too long. And when I say too long, hour, 2 hours, 3 hours, it just doesn't work. And I have the scars on my back to prove it over and over again, although those scars have well healed because I finally learned my lessons, except as a trade. But to me, gold is, and it's not even an inflation hedge. It's a deflation hedge in a fiat currency world.
Yes.
Because what you're hedging against is banks, central banks. That's what I hedge against. That central banks are going to lose control, which they've done and are doing, of the fiat currency world. And that's why I own gold. I don't own gold for inflation. Everybody says, whoa, inflation. That's the old line argument. Once Nixon took us off the gold exchange standard, as the French rightfully referred to it in the 60s. No, it's not. I have a great, Bernanke told you that his greatest fear was deflation. Mm-hmm. End of story. That's what his fear was, not inflation. Paul Volcker's greatest fear was inflation. Bernanke, being a student of the Depression, his greatest fear was deflation, because they always believe we can stop inflation. That's what Volcker taught the central banking world. You could stop inflation if you raise interest rates high enough. You can put an end to it. The question is, as the Japanese have showed us, and the Europeans are showing us, and it's interesting that we're coming to this discussion today, because I had this with my friend Kevin McCarthy, who's really bright about these things, and we were talking about it this morning. And the phrase we haven't heard in quite a long time is pushing on a string, and that's what we're doing, and that's what the fear of deflation is. Because no matter how low you take rates, the classic definition of pushing on a string emanated from the Austrian school, and of course, I'm sorry, I'm getting a little pedantic here. I hate that, but I do have to explain it, because it comes from one of my favorite economists ever, Joseph Schumpeter, and that no matter how low you take interest rates, you cannot get entrepreneurs or business people to borrow because they don't see the ability to make a profit. So if you really simplify that and understand it, it's, if I offer you money at zero and you don't see that you can make a 2 or 3% profit or a 1% profit or any profit at all, you're not going to borrow. You're not going to borrow. So that's the whole essence of what Bernanke feared, is that the economy goes into a slowdown. And no matter where I take what he calls the zero lower bound, no matter where I take rates to, I cannot entice you to borrow. If I can't entice you to borrow, the animal instincts that drive capitalism are non-existent. And that's where you live in fear, in a capitalist society.
It's interesting. So one of the other things we were talking about this morning, Ira, before we came back in, is Matt and I were trying to figure out where we were looking at the gold, the crude yuan.
Oh, I saw you sent that chart. Yeah, interesting.
And we were trying to figure out where that was being traded at.
It's in Shanghai, I think, and we had mentioned that real quickly last week.
Yes.
It's the yuan oil futures contract that's somehow convertible into gold, and I don't know what that mechanism is. I don't know how that works. I've read some stuff on it, and I've got to delve deeper into it, but I haven't. It's hard to find anything that's real, or that's not conspiratorial based.
Right.
When it comes to that.
Well, the Shanghai Exchange actually, I think, has it published. So I haven't looked at it since they announced it, because I went and looked at it. So it's been a few years, because it intrigued me so much. Yes, there is, as I say, a gold kicker to it. Nobody's talked about it. I don't know how much volume there is in it. I thought it was an interesting play by the Chinese, and it really put me onto that concept that they were looking to supplant the dollar, and to do it by hardening their currency.
Hey, Matt, it's Jen Curran. How are you?
Good. How are you, Jen? You all right?
Yeah, can you get me Pat O'Brien's number? Kevin's not answering his phone, and I'm wondering if he forgot it.
Yeah.
But I've been trying him all day, so I thought maybe I'd try Pat.
Yeah. Is everything all right?
Yeah, I'm on their deadline at work, and I got to get a hold of Kevin.
Okay, hold on.
All right, Pax, mute yourself, will you?
Oh, shit. Sorry.
Yeah, and Ira, I've got two charts up here. I don't know what I've got up here, because that's one weekly. Here's the other weekly in the yuan, and then this weekly looks totally different. So I don't know what I put in here.
What in the yuan gold?
Yeah, oil.
Oh, okay. I don't have that, so I only looked at yours.
I put it up. I just put it up. July crude 9 against dollar CNY.
Okay.
And I've got it drop. The chart I sent you is drop below the 200 week. But the one I've got up right now that I just typed in doesn't show that.
All right, I'm not looking at the chart, but we shouldn't be. Let's see. So the yuan is trading what, 6.9? Hold on.
It's just however you delineate it and you throw these things in, you come up with really different looking charts. Maybe one's a daily, one's a.
Okay, so let me just, I don't have the chart up. I'm going to do some hypothetical in my head. So let's say there it is, 6.9. So it's 6.9 to the dollar. So I am, all right, let me round it to 7 and make my life easy. So let's say it's 350 yuan, 360 yuan to a barrel of oil. How about that? Does that work? Let's see. What was that? 52.80.
Oh, that's a problem. I had the wrong spread bar up. That's why.
Okay. I hope I helped you with that. Okay.
Yeah. Okay. Now it's right. I had the wrong spread bar up. If you put a 5-tick bar in, you have to go to a daily when you go out to a weekly bar. Otherwise, you get the wrong.
I'm not even going to go through because I'm watching some other stuff here, and
yeah, I got
it. Okay.
Okay. So now I got the right chart up. Yeah. That's the one thing about the spread bars. You have to check your data inputs once you go out to a weekly on farther out. And the NASDAQ kind of went down to its first area and wiggled through it.
I couldn't.
Yeah, let me finish this. Yeah, you know what, I know, and now we're bouncing pretty good here, which is good. Market needs to bounce here. Let's see what some of these my favorite stocks. The bank stocks, has the bank stocks bouncing?
Yeah, well, it started out this morning. They were buying the insurers again.
Yeah, I know. AIG. Yeah, look at Goldman's up now. They turned. JP Morgan's up. York up. Citibank is up. So they've all turned around here. So now, the market's okay. So yeah, steepening curves. Yeah, I can buy it.
Yep, a whole 4 basis points.
Oh yeah, it's unbelievable. It's unbelievable.
And Morgan's still under its 200 week. Who even wants it?
I'm going to tell you what. I love when these guys come on and Kramer et al. And they tell me about, you got to buy Bank America. Well, I know they've never banked at Bank America because nobody who's ever banked there would buy it. I'm sorry, it's just a fact. Citibank put up a.
Citibank's the worst. That should have gone to 120, and it went straight down.
I'm telling you, if Elizabeth Warren, and believe me, I know there's a lot to dislike about Lizzie Warren, but when it comes to financial stuff, Lizzie Warren knows her stuff. And if you go back and if you would look at old tapes from 2008, 2009, when they used to bring her out on CNBC to talk about financial, she knows her financial stuff. And if I could tell Lizzie Warren one thing, I said, if they want to roll back banking regulations, which I'm not in favor of, by the way, the banks didn't pay a big enough price, as far as I'm concerned, for the damage they did to Main Street. And I'm not in favor of rolling back the regs. But if there was a barometer to roll back the regs, when Citibank makes all-time highs, I'll agree to roll back bank regs.
Well, look at this thing. It's messed up. It couldn't even, it was a couple years ago I bought this thing. If it would have been any good at all, it would have come back and retested the low of 2008, the July low, at 128 and a half.
Right, forget. But if it makes a new high, the all-time high in 2000 and in December 2006, what was the high? The high was
566.
570. So
Yeah.
okay, if Citibank goes back over 570, you can roll back banking regs. Until then, no, I'm not buying it. And even Bank America. Well, I think Bank America is actually higher. Let's see if that's the case. No, it's not close to those highs. Wells Fargo and actually J.P. Morgan are the only banks that made new highs from 2007. Everybody else. So until all the banks are in sync, then you can roll back the regs. And I say that, tongue in cheek, of course, because, some of these are just those are the true deplorables.
It's unbelievable. I think I bought Citi at right in here at 60 or something on a breakout. It should have gone to on that. I don't know when it was. It was a year or two ago. Angela, you remember when I bought it? It was in the summer.
Yeah.
And
it was like August, October of 17.
Yeah, I know. There were some plays in it, but when these people come out and talk, if everything is so good, Citibank is still $510 off the highs made in 2007. I'd say, yeah, not so good. But that doesn't mean, now you could say, well, there's a lot of room to run. Yes, I agree. But
yeah, run you over.
In this environment, I mean, if you buy into the flattening yield curves not being good for bank stocks, it ain't going to do it in this environment. I got news for you.
Yeah, that's the most. You can have that bank with Waleed. Yeah, give it to let the Saudis appropriate the shares.
Yeah, the sheik. Yeah. The sheik.
The sheik.
Yeah. Hey, I know it's just been an absolute. It just hasn't performed here. I need to see some performance, and we haven't seen it on a global banking basis. And I know that Pax was, we laughed about Deutsche Bank last week or 2 weeks ago, because if you look at that stock, and that's with extremely low rates in Europe, which are a problem in their own right for other reasons. And if I hear one more person talk positively about Draghi, truly, you may as well sing the praises of Alan Greenspan, and I'm not singing those praises either.
We talked about that in the same conversation.
Hey, Ira, I see you really like that cartoon I sent you.
Thanks, Angela. Refresh my mind again. Oh, what was it? I know I sent you.
We're lost, aren't we?
Yeah. You'd have to be able to admit it. It'd be like my wife telling me when we're on a trip, don't you want to stop and ask directions? No, don't worry, I'll figure it out. Wait, I think we've gone in circles for 3 hours. No, I know where I'm at. It's scary.
Going back to Citi, I have been under the impression that they still have a sizable emerging markets book.
Oh yeah, they that's where they wanted to play, and and it made a lot of sense because they wanted to be the big player, and they had a real leg up there. But that's not really even what hurt them. It was so much. They just got involved in so many different areas, and they were a huge trading center, which they're not anymore. So they had a huge profitability that they could always depend on, and that's gone. And that's one of the things that some of the people, analysts on Wall Street, they all talk about foreign exchange, interest rates, and commodities. Those were huge profit centers for the banks, and were able to carry them through some lean times. Goldman Sachs especially but those profits are not there to carry them through that. So, you know, there's no fallback. It's like being a trader, and you were able to have, you know, such an edge in the market. You could withstand some lean times, you know, and some bad trades, as Judd and I will be the first to tell you, because you had an edge. There's no edge, and there's no profit center. And, you know, another big part of it is that a lot of these hedge funds, when they were making big profits, they tolerated some of the shenanigans of the banks, which the shenanigans were this. Not only did they price them and read them and have an edge in pricing them, you know, through their prime broker game, but for a lot of these banks, you know, it doesn't take a genius if Soros or Tudor or Kovner or Judd, if these guys are really trading well, and you're the one managing or pricing them, it's not hard to see what they're doing. So in 1992, when Soros supposedly, you know, broke the Bank of England, and we can discuss whether that was right or not, the amount of banks who tail coded them into that trade by being long Deutschmarks and short Italian lira, long short the peseta, they piggybacked on top of them. Forget about how much money they made just pricing them, but being able to you know, knowing that he was hot and tail coding them was an enormous edge. An enormous edge. I know guys who built their careers, and then after that was all over and said and done, they got big job offers from especially Deutsche Bank and others. They never made another dime. And that's a fact. That's a fact. And then when Soros, you know, when some of these guys were wrong, especially like with long-term capital, then the banks were on the wrong side of this too, by the way, because they were following. And it was a question of who was going to get out first. You know, that's why Greenspan had to put them in a room. And, you know, the 14 banditos, he cornered them all in a room, and they weren't going to rush for the exits. You know, if you read the book When Genius Failed, which is the story of the failure of long-term capital, you find out that Goldman went in with laptops and downloaded everybody's positions. Hey,
yeah.
You know, but it's just, and that's why, you know, I tongue-in-cheek say, now the positions are so well disseminated, like you'd have to rent the Rose Bowl if you were going to lock them in a room, because there's so many people who have their hands in the derivatives positions are so widespread. That was one of Greenspan's most classic mistakes. You know, Greenspan would brag that the system was so safe because the positions in 2004, 2005 were so disseminated that it was good for the systemic risk. Well, there's somebody who doesn't understand the way banking and the shadow banking industry works. That's why the Fed was so wrong. They thought, well, the more hands that are involved in this. No, not true. Not true, which is why the subprime situation really got out of, quote unquote, out of hand, because the positions were so widely disseminated. And when it came down to it, and Judd and I would tell you, when the proverbial crap hits the fan, you're worried about yourself. You're not worried about your clients' positions. I got news for you.
Ira, was that you that said you had a conversation with Felix Zulauf?
I did. Yeah, I did.
You did?
Last week. And it was an honor because he's one of the guys who I respect most. And I'm not telling you anything. I just finally, somebody put us together because somebody called me and said, you know, how would you like to talk? I said, what? I said, and I called him, you know, and when we got together, you know, my respect for him is so great that I called him Mr. Zulauf. He says, no. I said, yes, I hold you in that high esteem. He says, no. But he he had read the blog through some sources, and he was very aware of me, which made me very proud. You know, that's a high honor because he is a very, very bright guy. So now I send him it whenever I write. We had some feedback last night about what I said about Mexico, and he agreed that you don't fight things on many fronts. You know, if you're going after something, go after something. You know, if you think you have an issue, deal with the issue. Don't start spreading yourself so thin. You know, that was my problem with what the Trump administration. You know, I'm not saying whether right, wrong, or but you're spreading yourself very thin.
Well, yeah, and here's another good example, is that you always have to wait until the next day to see if the pattern's real. You know, you had something that, from the discussions we had last week in the room about, you know, you would want to be rationally long Mexico, short China, and then, you know, overnight, he blows the whole thing up.
Yeah, Wavy. I was out, as I told you, I was trading it. So that drive over to 26 and Horn cost me some money because I had bought back a quarter of my peso position at about 3:45 in the afternoon when the market. And I saw some of that headline stuff out of Washington Post saying there was discussion that he might put out. It was out before, but so shame on me. But I had gotten out so good just because I was trading it. So I got, that cost me a little bit, but I had enough gold that didn't bother me. But except that I was angry at myself because I was out, and it was one of those I violated. Let things happen. When I saw that little headline, I should have just said, okay, you know what? It's not news, it's rumored, but I fell prey to it. But interesting, and yet it's totally undoing everything that they want to do, because now look at a peso chart.
It's crazy.
You're not going to help yourself if you're driving the peso lower. You're giving them a greater competitive edge anyway, which they already have to a max degree, as I would say. They have it to a max degree. Why do you want to give them more?
Well, I bought EWW twice on Friday, and I was never comfortable with it. I pushed it and walked away from it.
Yeah, exactly. You know what, Judd? I didn't buy, we talked, and I didn't buy any KSU because I watched it, and it held, nicely, but it wasn't worth getting involved in. There's that damn dog. Eli, what are you barking about, buddy? Okay. So, you know what? Yeah, we saw that. And again, that's a trading faux pas on my part. Why did I have to get back? You know what? It was nice and comfortable. What am I doing? So,
even with Kansas City Southern, the way it opened up, it didn't open up any place that you really wanted to make a trade. And then it down to the 200-day and rip right to the bottom of the cloud. And, I just looked at it, and I looked at it all, and I go, I'm totally out of step with it, and I'm not going to lose money. And that was the end.
You know what? Right. And I have a core position because I've gotten out. I've traded it really well, but I keep a core position because I'm waiting for it's just one of those. I've done so much work on it. I'm waiting for Warren to show up and finally buy the damn thing, or at least put it in play. But now, of course, it takes a back burner. But I was interested to see where it was going to hold, because we've, back in December when it got down to where, $92, $93 when they were busy crushing everything. So let's see where, I want to see where it holds in here will be more important to me than anything else. Because, again, even Lighthizer, when I started to read that, there was discussion about, he was not happy about this. And, Kevin Hassett put it in his resignation today. I don't care. I have very little respect for Kevin Hassett. Just over the years, he's been at AEI, American Enterprise Institute. Never been a big fan. My son actually did an internship there. So when I was visiting him, I actually sat and talked to Kevin Hassett probably about I don't know. Let's see how old. So yeah, I can tell you exactly. 15 years ago, and we got into he was very gracious, and we sat and had a discussion. And he was very bullish dollar yen, and I was very bearish dollar yen. And he explained to me, and I walked out. I go, oh, we can have differences of opinion, but he was so sure about it.
Was that in '98 when all those guys were all those idiots?
No, this was in like 2003 or 2004, and yeah, they were all pushing this, and I go, yeah, I don't see it. So. And I follow his work. It's not just that. And we can. Listen. I disagree, and guys can disagree with me. That's absolutely what markets are all about. But I never understood how certain people get there. So,
go to Washington, get a political job, and turn into an idiot.
You know what? You run a think tank, and I have a very good friend who runs probably the best leftist-based think tank, the Center for Economic Policy and Research, who his partner, but I think he's left, was Dean Baker. And if you go back and look in 2005, 2006, Dean Baker was doing unbelievable work about the coming housing crisis, about what was going to happen with, he was right on top of it. So when I listen to these guys who say nobody saw it, I was laughing in 2007, 2008. Nobody sees this. I go, what are you talking about? I said, even, I had talked about it in that book, Inside the House of Money. I wasn't definitive as to, but I knew what was taking place. And it was one of the better things about why I did, Steve Drobny and I really enjoyed it, because it gave voice to views that I had. There are people who saw this.
A lot of people did.
That's nonsense. Yes, exactly right, Judd. A lot of people did. It's just that nobody who they would put on.
Suzanne Melgus was like one of the largest bundlers of mortgages in the world at the time.
Uh-huh.
And they go to regattas in the Bahamas with all 5.5 regattas, and it's like a who's who in the planet that sails in those things. And it's all the heads of the Swiss banks. And they would come up and corner and go, what the hell's going on in the United States? It's insanity.
Yeah. Yeah, it is insanity. Listen, you and I know a lot of idiots who are making a lot of money selling mortgages.
Jeez.
And when they would tell me how they were doing, I would scratch my head and go, what am I missing here? What am I missing?
Human nature. Remember all the lawyers and everybody else back in 98, 99, that were quitting their day jobs?
Oh, yeah. I got calls about how stupid I was because I was, not buying into the .com boom. Because I would go to the Quotron on the floor and I could see what stock was in play by how often I saw somebody looking at a quote for a quote, and I go, oh, this is in play. Oh, this is in play.
Well, Kevin got me that ready front end just I was trading the tails of the baskets. I mean, when you couldn't buy or sell 100 shares of Sienna, you knew the next trade in the NASDAQ futures is going to be 40 points away, whether it was hard to sell or hard to buy.
Yeah.
And that cycle repeated itself, in what, 06, 07, when, everyone became a real estate agent, a mortgage broker, early retirement, and they became one of those two things. But Ira, Gary Schilling was on the subprime real estate thing in 2004.
Yeah,
when he started
getting on that. Yeah, and it was early at the bank stocks, and listen, Gary Schilling is a wonderful analyst, as is, and he's been wrong. I was pissed. CNBC was beating him up a couple weeks ago. Is David Rosenberg? And David Rosenberg is a really good economic analyst, and he understands markets. But he's been pushing this slowdown for quite a while, as has Gary Schilling. Gary Schilling, I've disagreed with him because he thought that the 10-year was going back down to 1.5%. And I don't see it because I look at debt. But it doesn't matter because it's not like I wouldn't be short the 10-year. I'm only short, on a yield curve basis. I wouldn't be outright short. But I still think it steepens out because I think that we're just running, that debt is way too high. And there's going to be a cost to it. And if nobody's willing to fund it,
you're taking probably a longer term view, which I think everybody here agrees with.
Yeah, right. And it's not my trading view. But it does give me strength to the curve, and that's why I was very interested to see between Friday and today that curve jumped 9 basis points, and I'm talking the 210. That's like insanity. A 210 curve without an actual Fed move. There's no Fed move. It's you haven't heard anything from the Fed. You heard Bullard, but Bullard has made 10 of these speeches in the last 6 months. And then, you get Kashkari, but you haven't heard, you still get others who are still holding the line going, well, inflation. I can't stand the inflation argument anyway, because 2%, even Volcker laughs at it, goes, who came up with this? I know where it emanates from. Don Brash from the Reserve Bank of New Zealand was the guy who was instrumental in putting that into everybody's bonnet, so to speak. So,
well, Adam Posen in that 11-minute podcast said they should raise it from 2% to something higher, right?
You know what? I have my notes here. That was the most arrogant 11 minutes I've watched. And what he says ultimately is he tells the European Central Bank, forget about rules. You have an international treaty that protects you. You're in the best situation of any central bank. Well, that is, to me, the height of arrogance because forget about European voters. They don't matter. Do what you have to do. And I think that's what's creating this tremendously dangerous world of populism, nationalism, whatever you want to call it, is the overriding. Hold on 1 second. Hello. Visa. So, that was, you go back and watch it. I mean, it is so arrogant. And even he admits he's being arrogant, but that's only because he makes it sound like he should be a member of the ECB or whatever. I found that really heartbreaking listening to it. It was so arrogant.
What was he implying or trying to say when he said, you've got the ECB is an international treaty?
That they cannot override you, unlike the Fed, which has to answer to Congress.
Okay.
Because the ECB is under international treaty, no nation state has the ability to whack you, or to prevent you from doing whatever it is that you need to do. And it's go listen to it and listen to it with that tone and go, holy, because it's all the way at the end. It's in the last 3 minutes anyway. And I go, and I have to be careful with him because I used to like him, but the more I listen to him, the greater disdain I have because he really is arrogant. But that's such an arrogant concept to say, because that's my point of why they need a German right now, especially Jens Wiedmann, to run. He makes the point because the Germans, if they get pissed enough with that attitude, because somebody is bankrolling this, right? Somebody is ultimately responsible for this. Is it the Greeks? Hardly, because they can't be responsible for themselves, although they're getting better. Is it the Italians? Can you imagine the Italians having to pony up to be responsible for the debt structure of all of Europe? No. The Spanish can't. The Dutch aren't big enough, and and if you know anything about the Dutch, they'd look and go, "Oh, we're out of here." So who bears the responsibility? It's not Finland. You know, everybody's, well, the Finns are monetarily conservative. Yeah, they can be monetarily conservative, but Finland is not going to support the entire basis of Europe. It's the Germans. The French aren't, because the French would abandon it in a minute. So you're left with the Germans. And that's why, to me, Posen is so preposterous and arrogant, because he's basically saying, we're going to lay this out. That's what you're saying. Go do what you have to do. Don't worry about it. You know better. Well, you know what? I hardly think that the history of the last 25, 30 years shows us that central bankers know better about anything. That's a scary concept, but it's an arrogant concept.
You know, Ira, we talked about how, you know, people change once they get tossed into that political environment. So let's just say we get a German at the head of the ECB, and let's just say that, you know, he turns into silly putty and, you know, just continues on in the same footsteps as his predecessors. If the German people see that, like, at what point do their heads explode? Well,
you know what? That is a great question. But at least they can sit back and go, okay, we have a German, and we'll accept that this may be what needs to be done. But without a German, again, Atmar Issing, who I have a respect for, who is the chief economist for the Bundesbank back when it mattered, openly wrote that article in the FT. You can go find it. Said, you know, this can't work because there's no taxation without representation. And you are asking German voters and citizens to bear the cost of sustaining the entire EU project. Now, of course, if you're a standard bearer of the EU, what you'll say is, look, Germany's done very well, and that they should. Okay, but don't I have a right to be asked and to vote on it? That's my question. Because if you don't ask me to vote on it, we have a problem. Can you imagine in America that they made this decision of such? Listen, you got Trump, and all you had was the subprime crisis, and I still think that Trump is a residue of that. That people were so pissed because Obama got elected because he was going to fix those things, and he did nothing because he kept Geithner and the guys who brought you that whole project together. And then, of course, who do we get? Jack Lew as Secretary of Treasury. Yeah, he's a good person, but he's in way over his head, in my humble opinion. But you've got all these issues. Now you go to Germany, and they've never had a chance to vote on it. These aren't their representatives. Very dangerous. And that's my point about the importance of Wiedemann. But we're not there yet. And I hope we don't get there. I truly hope we don't get there, but I can't say.
My fear is that nothing changes there.
Yeah.
And they end up saying to themselves, you know what? Yeah, we got a German there, but nothing's changed.
Yeah. Well, then you'll see the alternative parties even rise more. And you saw the impact, even though it wasn't crazy in these recent elections. You know, Salvini, he understood what happened, and he's not afraid of anything. All right, I'm going to come back.
Okay.
I'm going to come back. I got to jump off, but you guys are really on top of a lot of good things, so that's why I jumped in. I'm sorry to.
No, Ira, it's great. Anytime you come, it's love having you.
Well, you know what? Yeah, that's why I'll ask you what you're talking about when you told me you were discussing the goals. I mean, I have spent a lot of time in this room discussing the gold currency. So,
All right. Well,
Okay.
thanks.
All right. I'll see you guys. All right. Thanks.
Bye.
Okay.
All right.